The Philippine government cuts its growth targets once again, blaming global uncertainty and mounting domestic headwinds. Jin Kim has that story.
Philippine economic targets are on a steady downward revision. At the start of 2024, the government was still banking on a 6 to 8% GDP growth range, but by year-end, it was narrowed to 6 to 6.5%. And now the government has cut its 2025 growth target.
The revisions take into account heightened global uncertainties such as unforeseen escalation of tensions in the Middle East and the imposition of U.S. tariffs.
And it doesn't end there. Exports are now expected to contract 2% this year, signaling a slowdown in global trade that's putting pressure on the country's growth trajectory. The peso is expected to hold steady at 56 to 58 per dollar, while global oil prices are seen averaging between $60 to $70 per barrel, far from the triple-digit scenarios feared in earlier outlooks.
Tempered by easing global demand and expected increases in global oil inventories, the Dubai crude oil prices are expected to average between 60 to 70 US dollar per barrel from 2025 to 2028, despite escalating geopolitical tensions.
With 5 rate cuts since last year, the economic team is betting on easier monetary policy to revive domestic demand.
This is expected to improve credit conditions and support sustained consumption and domestic activity.
One major challenge remains the fiscal deficit, or when the government spends more than it earns.
Fiscal consolidation remains a cornerstone of the government's medium-term strategy. The national government is committed to reducing fiscal deficit while simultaneously ramping up investments in infrastructure, human capital, and social services.
To support this strategy, the government is banking on revenue measures, including the VAT on digital service providers, stronger enforcement, and faster tax digitalization. And despite a tighter fiscal space, the DBCC is proposing the largest national budget in history, 6.79 trillion pesos for 2026, citing that the budget will be used for education, healthcare, workforce upskilling, infrastructure, and digital transformation.
The government is committed to reducing poverty to single-digit levels, creating quality jobs, safeguarding macroeconomic stability.
Jin Kim, Billionaire News Channel.